Hello friends, so in this video I'm going to explain the exam kit of Kaplan, especially for the ACCA. So I will explain each and every question along with the option why this is the answer, why this is not the answer. So let's start without wasting our time. So what is the first question is, which of the following statement is true? Okay, so option A is the director of a company are liable for any losses of the company. It is not true because directors of the company are not personally liable for his losses. Okay, in case of sole trader have a unlimited liability. Partnership, in the case of partnership, partners also has a unlimited liability, but director in case of a company, director doesn't have a unlimited liability. So option A is false. What is the second option? A sole trader business is owned by shareholder and operated by the proprietor. So, in case of company it is owned by shareholder and but in case of sole trader it is operated by proprietor. So half option is true, half option is false, so it is completely false. Partners are liable for the losses in partnership in proportion to their profit share ratio. As I told earlier, partnership, in case of partnership, partners has a unlimited liability, so they are not only liable for the losses in the partnership in proportion to their profit share ratio. Okay, so this option is also false. So what is the D option? A company is run by director on the behalf of its member. So this is the option is true. Company is run by director on the behalf of its member. Member means shareholder. So option D is correct. Okay. So moving to the second number. Which of the following statement best define the statement of financial position? Okay, so it is a summary of income and expenditure for an accounting period. It is given by statement of profit and loss, not by the statement of financial position. So option A is incorrect. So it is a summary of cash receipt and payment made during an accounting period. So it is this summary is given by the statement of cash flow, so it is also incorrect. It is summary of assets, liability and equity at a specified date. So option C is correct. It explains the statement of financial position. So option C is correct, and we will also look to the option D. It is summary of assets and expense at a specified date. It complete half definition, half portion of a statement of financial position, so it is incorrect. So what is the answer? So option C is correct. Which of the following statement best define the statement of profit or loss? So answer A, option A is it is summary of assets and expenses at a specified date. So it is a half definition of statement of financial portion, so it is incorrect. It is summary of cash receipts and payment made during an accounting period. So it is given by the statement of cash flow, so it is also incorrect. It is summary of assets, liability and equity at a specified date. This is given by the statement of financial position, so it is also incorrect. It is summary of income and expenditure for an accounting period. So this is the answer which explains the statement of profit and loss. So option D is correct. Now moving to the 4th number. Which of the following user group is likely to require the most detailed financial information? So option A is management. Of course, management need a detailed financial information as they have to plan plan according to the financial statement for the organization. So they need detailed financial information. So option A is correct. But we will also look to the other option why it is not. Okay, why it is not the answer. So option B is investor and potential investor. Investor doesn't need a detailed financial information. They only concerned for their investment and the profit they are getting from that investment, that is dividend. So they will not need a detailed financial information. So option B is incorrect. Option C, government agency. Government agency also don't need the detailed financial information. They are only concerned for the that tax purpose, only concerned with the profit of the organization, only for the tax purpose, and as well as they are concerned with the sale performance, how to assess how the economic of the country is performing. So option C is incorrect. So option D, employee are also do not need the detailed financial information. They are only concerned with their job, their promotion, their salary, so they don't need the detailed financial information. So rest 3 options are incorrect. Option A is the correct answer. Okay, which of 5 number, which of the following statements are true? Option 1, accounting can describe as recording and summarizing of the transaction. Of course, accounting is described as recording and summarizing of the transactions, so option 1 is right. What is option 2? Financial accounting describe production of a statement of financial position, a statement of profit and loss for the internal user. This option 2, financial accounting is not for the internal use, they are for the external use. So option 2 is incorrect. So and only option 1 is correct. So answer is A. Okay. 6 number, what is the main purpose of the financial accounting? To record all transactions in the book of account. No, this is not the main purpose of the financial accounting. This is a half portion. So basically when all transactions are recorded in the books of account, then we classify such transaction and group the similar account, so called we ledger. Then we do trial balance, which is the list of the summary of the ledger account. Then we move to the statement of financial position. So this is a half covering the half portion of the definition. So A is the not correct. Option B, to provide management with a detailed analysis of a cost. No, this is the purpose of management accounting, not a financial accounting. So option C, to enable preparation of financial statement that provide information about the entity's financial performance and position. Yes, option C is correct. So this is the main purpose of financial accounting. Option D, to calculate profit or loss for an accounting period. This is the purpose of statement of financial this is the purpose of profit and loss. So D is incorrect. Option C is the correct answer. Okay. 7 number, which of the following statement doesn't explain the distinction between financial statement and management accounting? So option A, financial statement are primary for the external use and management accounting are primary for the internal use. This is the we don't explain this. Okay, financial statements are primarily for the external use and management accounting are primarily for the internal use. This is the correct. So B option, financial statements are normally produced annually and management accounting are normally produced monthly. This is also correct. They explain the distinction between financial statement and management accounting. So option C, financial statements are more accurate than the management accounting. This is a false, because both of the accounts need to be accurate. Okay, so this is a false. We don't need only financial statement to be accurate. Both management accounting and financial statements should be accurate. So option C doesn't explain the distinction between these both of the account. So option D, financial statements are audited by the external auditor and management account do not normally have an external auditor. So option D also correct. So answer is option C. Which of the following items is the IFRS Advisory Council is responsible for? Okay, to give advice to the IASB or to the trustee. Okay, to give advice to the IASB or agenda discussion. Both of the options are correct. You will find this in the book of Kaplan. It is given clearly, so it didn't need any explanation. So answer is A, both 1 and 2. So moving to the 9 number, which of the following statement best define the liability? Okay, liability. Okay, a liability is an obligation arising from the past transaction or event. No, it is a present obligation. So the word present is missing. So option A is incorrect. A liability is a legal binding amount owed to the third party. This is also incorrect. A liability is a present obligation of an entity to transfer an economic resources as a result of a past event. So option C is correct. It is as per the definition. You can look in the book. So no need to explain this option. Okay. So option C is correct. 10 number. Are the following statements true or false? Okay. International accounting standards are effective only if adopted by the national regulatory body. Yes, true. This is option is true, because IAS international accounting standards, it will be only effective if it adopted by the particular country or national regulatory body. So option first is true. Accounting standards provide guidance on the accounting for the all type of transaction. This option is false. So 11 number, it not provide the guidance on the all type of transaction. So this is false. Okay, 11 number. Which of the following statement best define the expenses? So it is as per definition. You can look in the option A. An expense is an outflow of economic benefit in an accounting period. No, it is false. An expense is an outflow of economic benefit resulting from the purchase of resources in an accounting period. This is not also true. An expense is an outflow of economic benefit resulting from the claim by a third party. This is also not true. So option D, an expense is a decrease in assets or increase in liability that result in the decrease in equity or other than those relating to distribution to the holder of an equity claim. Yes, this is a true. This is as per the definition. You can look into the book. So no need to explain this. Okay. 12 number. Which of the following statement is true in relation to the partnership? Okay, option A, partnership is a separate legal entity. No, this is in case of a company. Company is a separate legal entity. Okay. Option B, a partner is joint or jointly owned and managed by a partner. Of course, this is the correct in relation to the partnership. Partnership is owned by two or more than two persons and managed by the partners. Okay, so this is the correct. Option C, a partners can raise capital by issuing share to the member of the public. No, this happened in case of a limited company or company. So they raise a share to the public and raise the finance. So this is incorrect. A partner is able to own property and other in its own name. False, because partners can't own the property and assets in their own name. They own the property and assets in the name of their firm. So it is false. 13. Which of the following statement is true in relation to the sole trader? Okay, a sole trader cannot have an employee. A sole trader can have an employee. He will be the owner, but he can employ some people below. He can employ the people who will work for him. So it is false. Option B, a sole trader is able to introduce or withdraw capital from a business at any time. Yeah, of course, this is true in case of a sole trader. They can withdraw money anytime. So C option, a sole trader has a limited liability for debts of the business. No, as I told earlier, sole trader and partnership has a unlimited liability. So this is false. A sole trader can operate a business from only one location. No, they can operate their business from the more than one location. So it is also false. So option B is correct. 14 number. Which of the following statement is true in relation to a limited liability company? Okay. Option A, limited liability company can incur liability in its own name. Yes, limited liability is a separate legal entity and they can own their assets in their own name. So liability will be also incurred in their own name. So option B, limited company cannot acquire assets in own name. False. They can acquire their share in the name of the company. So it is false. A limited liability company cannot incur liability in its own name. They can incur liability as I told earlier. So option D, limited liability company can form on informal basis by simple agreement between the first shareholder. It is also false. Limited liability company are formed on the formal basis, not by the simple agreement with only with the first shareholder. It is completely false. So option A is correct. 15. Which of the following item could be used to encourage executive director to operate in the best interest of the company? Okay. Option A, they could be awarded a high salary. They will not operate, even they are given a high salary, they will not operate in the best interest of the company. So because they are getting the high pay, so why do they need to focus on the company? So they want they will not work in the best interest of the company. Option A is incorrect. They could receive bonus based on the both individual and company performance. Yes, if they will given a bonus based on their individual performance as well as the company performance, they obviously act in the best interest of the company. So option B is correct. Option C, they could be entitled to a large payment on resignation. This is also not correct. If they are given large payment on the resignation, what's the connection between they are acting in the best interest and they are getting the pay? So it's not correct. Option D, they could could be asked to attend an annual general meeting of a company. This is also not motivate them to act in the best interest of the company. So option D is also incorrect. So what is the answer? B. Okay. 16. Which of the following statement relating to a partnership of 20% and limited liability company with a 20 shareholder, each with a 5% shareholding is true? Okay. So question is asking the partnership of 20% and limited liability of a 20 shareholder, each with a 5% of shareholding, is true among the following statement. Okay. Both partnership and limited liability company are able to own assets in their own name. See, in case of limited liability, assets are own assets as well as liability incurred in the name of the company. So this is not in the true in case of a partnership. Partners cannot own their assets in their own name, so they can own the assets in the name of the firm. So option A is incorrect. The member of a limited liability company have a right to participate in the management of that company. The member of limited liability company have right to participate in the management of the company, whereas partner do not have a right to participate in the management of the company. See, option B is also incorrect, because partners have a right to participate in the management of the company. Members of the limited liability company could not participate in the management of that company. So option B is incorrect. The partners have a right to participate in the management of the partnership, and whereas member of a limited liability company do not have a right to participate in the management of the company. See, option C is correct. Okay, as I told earlier, option D, partners are subject to the same regulation regarding introduction and withdrawal of capital from the business as a limited liability company. Option D is not correct. In case of limited liability company, it won't act in the same regulation in case of the withdrawing of the capital. We cannot withdraw capital easily in case of a limited liability company. So option D is incorrect. Answer is C. Which of the following is the most obvious means of achieving public oversight of a corporate governance? Okay. In finance, in BT, there is chapter of corporate governance. There is explains, they're having a paragraph. When you will read those paragraphs, you will get to know about this, but although I will explain this question. So what is the option A? Company establish a comprehensive website. Now, public oversight of corporate governance means simply that company have to produce the annual report, so that every stakeholder can get it. Okay, so this is what the actually need of the corporate governance, public oversight of the corporate governance, which is explained by the option B, publication of annual report and the account. This is a correct answer. Option answer 80 number. Which of the following item would not be included in the sole trader capital? So not included. Okay, A, equity share capital. This item will be included in the company financial statement, so it will be not this item will be not in the sole trader capital. So option A is the correct answer. Revaluation surplus, you will get confused with the option B. See, revaluation surplus in the case of the any non-current assets, example building, so sole trader can also have a building, so they can also revalue those buildings. So option B, don't get confused with the option B. So see, personal drawing also item will be included in the sole trader capital account are also there. So option A is the correct answer. 19. Which of the following pair of item would you expect to see in the financial statement of partnership? Okay, A, dividend paid and share premium account. This item we will see in the financial statement of the company, not in the partnership. So B, capital account and profit appropriation account. So option B is correct. This item will appear in the financial statement of the partnership. So option B is correct. Profit appropriation and dividend paid are in case of a company, so it is incorrect. Again, D, share premium account is also in case of a company, so it is also incorrect. So option B is the correct answer. 20. Which the body is responsible for the issue of a international financial reporting standard? It is a straightforward question. You can also see in the books there is some function given for the each and every body, so you have to mug up that function, and you can easily tackle this kind of question. So this is answer is 20 C. So IASB is responsible for issuing of IFRS, so option is C is correct answer. 21. Are the following statements relating to the IASB conceptual framework for the financial reporting true or false? Okay, it is a financial reporting standard. This is the false. It is not a standard itself, although it is a reference document. So when the new standard are developed, reference this is a act as a reference document. So it is incorrect. So it what is the second option? It assists in developing IFRS based on a consistent concept. True. It assists prepared in developing consistent accounting policy when no standard apply. It is also true. It assists all party understanding and interpreting IFRS standard. It is also true. So option first is only incorrect. 22. Which of the following statement best define an assets? It is also as per definition. You can look in the books, you have to mug up those definitions. So a is an asset is a resources owned by a entity with a financial value. It is incorrect. It only include only part of the full definition, so it is incorrect. Actually it is present economic resources, not an resources. Okay. And B, an asset is resources controlled by entity from which future economic benefits are expected to generate. No, it is also, as I told, it is present economic resources, so it is also incorrect. C also the same, so answer D is the correct answer. So I would like to clear the definition of the asset. For example, if we are selling the goods on the credit, so what is the journal entry? Receivable to sales, and receivable is our asset. So receivable is we will get the money in the coming future, so it is our present economic resources. As a result, which is controlled by entity means the owner, and as a result of past event means the sales.